Amazon shares initially jumped last night after the company reported revenue that beat analyst estimates, bolstered by strength in its advertising business, but the stock reversed course after executives on the call suggested weakness in cloud growth, and that could continue in the near term. Joining us now is Dan Flax, Neuberger Berman, a senior research analyst, and even before the numbers came out, I guess, this is your job. You're supposed to know these things, but you knew that there was some slowing, or at least said that that cloud business is slowing a little bit. And just to put an actual number on it, so it grew 11%. In the first quarter, year over year, it had grown 16%, and this was the slowest growth since they started telling us about individually AWS back in 2015. So eight years, this is the slowest growth. You still like the stock, Dan?
Good morning, Joe. I do like the stock. I think it's attractive at current levels. I appreciate the slowdown in Amazon Web Services in the month of April, as you point out. I think what's going on here is that customers are optimizing their spend at Amazon Web Services, at Microsoft Azure, Google Cloud, but the longer term trends remain robust. And I say that because if you look at newer workloads in areas like artificial intelligence, there's a long runway over the next several quarters and really years. And I think Amazon, certainly from what their customers tell us, is very well positioned to capitalize on it. So yes, there's some near-term slowdown, but the company is executing well, and I think they're going to emerge stronger from this period.
Tell me about just what we think of with Amazon in the business. You were thinking maybe the consumer, some of the macro issues might be reflected in Amazon results, but they were pretty strong. Was that a surprise to you?
There are a lot of cross currents across the consumers. So parts of Europe were actually a little bit better than anticipated. The U.S., I think, is holding in quite well. What's important in the consumer business, as we're seeing with Prime, is that they're continuing to get back to more one day and really a lot of same day delivery as well. And the more they can do that, the more they can drive purchases from customers. On the cost side, of course, they're actually making progress, and I expect we'll see significantly more improvement over the balance of the year and into next year. So they're doing well in the e-commerce business. There are cross currents, but we think they're very well positioned there as well.
So of the big names that we've seen, would you buy all of them this week, or you like some more than others? Is there some you'd avoid completely?
We're buyers of Amazon at current levels. We think the durability of the growth is notable across AWS and the e-commerce business. We continue to like Microsoft, where we think the Azure platform positions the company well. Google is also attractive at current levels in our view, given how search is likely to perform later this year, as well as YouTube and the Google Cloud. We continue to own Meta. We are watching how they transition through this difficult environment. I think they're doing quite a good job, but we prefer Google for new money in the digital advertising space at current levels.
You like everything. You didn't say one thing that you wouldn't buy. Did you like it? Have you been
so grouchy?
No, but have you been holding these for the last 2 years? Dan, did you ever not like them?
Joe, we've been long-term shareholders in these names, and it's driven by the innovation and the growth. These companies have to constantly reinvent themselves. If we think back nearly 2 decades ago when Amazon started Amazon Web Services, they're constantly looking to invest in new businesses. We're seeing that with the Google Cloud business as well. And of course, Microsoft has built a very valuable platform with Azure. So it's about the innovation, the reinvention, and the growth. And if we step back and think about this ability to empower others to build on top of their platforms, that is what has attracted us to some of these companies, and why we think in the case of Google, Alphabet, and Amazon, we're buyers today.